I believe it's going to continue to be volatile for weeks and weeks or months and months, maybe some years here. Truly, I think, look, $100,000 has been a massive mental level for people. You know, it jumped over it, came back, jumped over it, came back, jumped over. It's done it like 4 or 5 times. And I believe that there are some, the OGs, people have been holding on to this thing for a very, very, very long time, and they've made life-changing wealth, and they're going to enjoy it now, and they're cashing in a little bit. I don't believe it's being suppressed. That's not my belief. Is it possible? Sure, of course it is. You know, but I do believe that institutions are now in here and taking advantage of this volatility. And once it does get over 100,000, stays over 100,000, and that mental level is gone, that becomes a support level.
Lavish highlights a significant shift in the financial world. Institutions that were previously unable to invest in Bitcoin due to operational and regulatory constraints are now entering the market. The introduction of Bitcoin ETF has been a game changer, providing a regulated and familiar vehicle for institutional capital to flow into the space. Hedge funds, pension funds, and endowments, which had previously been sidelined, are now able to allocate capital efficiently. One notable example Lavish points to is HBK, a massive hedge fund based in Dallas, which has begun investing in Bitcoin-related assets. These players are not just investing in Bitcoin directly, but are also leveraging options and derivatives to manage risk effectively.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space, and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks, and enjoy the video.
And I'm seeing institutions come into the space and start buying. And it's interesting because you hear of the big players, and some of the big banks who are buying MicroStrategy, and some of the big banks who are buying some IBIT and whatever, and some sovereigns. But just talking about institutions and ones that you would never even heard of, like for instance, I was talking about this the other day, that when you look at the ETFs and the holdings of ETFs, sometimes you have massive players in there that people would not even recognize. And so one of those players is HBK, and this is a Dallas investment firm. It's a Dallas huge hedge fund. How are they investing around it? I don't know. The options are likely a very big deal to them because they can manage risk around it, and now you've got that ability to do that. So the point is, though, is that now we're starting to see players come into the space that may not have come in before because of those operational issues. Now, even hedge funds. But forget about pension funds and endowments. They couldn't come in before the ETFs. Now they can. Mm-hmm. So, but as Bitcoin does solidify itself as an asset in that total investable universe, and that volatility does dampen a little bit, I believe it's going to continue to be volatile for weeks and weeks, or months and months, and maybe some years here, likely years here. But once it does that, then it starts to draw from the rest of that investable universe, not just from stocks and risk assets, but now it's going to draw from bonds and from real estate, because it's an easier asset to get a hold of for real estate than, you don't have to have management and oversight and maintenance fees and all those costs involved. Super simple. It's just a store of value rather than have an illiquid store of value of real estate. You have a very liquid store of value in Bitcoin. I believe that will be one of the buckets it starts to draw from. And then obviously bonds, with everything we're seeing that's going on the sovereign level, and how all of that debt and all that risk in the great financial crisis was kicked up to the sovereign level. Mm-hmm. Now we have a problem there, and we have necessary debasement of our currencies, of our fiat currencies that you talk about all the time, that bond investors are waking up to. And then they're realizing they need a better return on their longer dated bonds in order to get a real return against actual inflation, not the CPI inflation, but real inflation.
Right.
And so that's a kind of a big picture overview of where we're at and where Bitcoin kind of fits in, but it will eventually start to draw from those other asset classes, I believe. No, I just think that truly, I think, look, $100,000 has been a massive mental level for people. You know, it jumped over it, came back, jumped over it, came back, jumped over. It's done it like 4 or 5 times. And I believe that there are some, the OGs, people have been holding on to this thing for a very, very, very long time, and they've made life-changing wealth, and they're going to enjoy it now, and they're cashing in a little bit. And you know, that's okay. They have way more than you and I do, and they're just cashing in, and that's okay, you know. But I don't believe it's being suppressed. That's not my belief. Is it possible? Sure, of course it is. You know, but I do believe that institutions are now in here and taking advantage of this volatility. And once it does get over 100,000, stays over 100,000, and that mental level is gone, well, that becomes a support level. But we're not there yet, at least not today. So
while institutions are waking up to Bitcoin's potential, the political class in Washington remains largely uninformed. Lavish notes that most policymakers still view Bitcoin as a speculative niche asset rather than a legitimate financial instrument. He argues that Bitcoin's relatively small market cap, currently around $2 trillion, smaller than Apple's valuation, means it has yet to command serious political attention. However, the conversation around Bitcoin is starting to gain traction in Washington. While Lavish does not expect the U.S. government to establish a Bitcoin strategic reserve anytime soon, he believes the mere fact that Bitcoin is now part of policy discussions is a significant step forward. The regulatory environment will play a crucial role in shaping Bitcoin's adoption at the national level, but legislative processes are notoriously slow.
If you look back over the period of the last 10 years, and you just look at the classic 60-40 portfolio, and you added any allocation to Bitcoin to it, it enhanced your returns dramatically. It only raised your volatility a little bit. And so it raised your Sharpe ratio. It made your portfolio a better risk-adjusted return than without Bitcoin. And that blows investors' minds. They can't believe it. They think that's just not possible. But it's because that it is volatile, but it's a volatility in a rising asset over time. And so if you hold on to that for a few years, it will enhance your portfolio undoubtedly, at least if you look back over the last decade. So if you pull up, like we can pull up the a 60-40 portfolio, and you can see how those Sharpe ratios they're affected. So I analyzed this for one of my newsletters, and if you look back the last 10 years through December, through 2024, and you had a 60-40 portfolio, your return over those 10 years would have been 8.5% annualized. Okay, over that period. If you added just 1% of Bitcoin, just one, then your return would have gone up to 9.7% annually. So that's another 1.2% annually. So your entire return goes from 132% over those 10 years to 159%. Okay, but here's the crazy thing: your volatility is very similar. It's still 0.57% annual daily. And annualized, it went from 10.86% annualized volatility to 10.9%. That's it, just 4 basis points higher, which took your Sharpe ratio from 0.63 to 0.73. Okay, so we know that the bonds were volatile, so your Sharpe ratio was not that great over the course of that period of 2021 to 2023. So we know that, and it was. But if you added Bitcoin, it enhanced it. If you added 5% of Bitcoin to your portfolio, your total return went from 132% to 290%. Okay, and your annualized return went from 8.5% to 14.2%. Like insane,
what
right?
A sweetener.
What a sweetener. Your volatility only went up to 11.7%. So it's less than 1% volatility rise, which took your Sharpe ratio up to 1.06. So now you're above. Now you're a better Sharpe ratio. So now you're over that 1.0 kind of threshold for your Sharpe ratio. And then if you added 10% of Bitcoin to your portfolio, your your total return would have gone from 132% to 520%. And your annualized return went to 19.5%. Your volatility only went up to 13.75% from 10.86. Yeah, it's more volatile, definitely. It's 3% more volatility annually. But your Sharpe ratio went to 1.29. Yeah. So it still went up. A lot fewer people in DC understand it. And I think the vast majority of them are not worried about it at all. And I don't think they care about it. They just think it's some speculative asset for, a small portion of the constituent that is very vocal about it, but it's not that big of a deal. It's this little $2 trillion asset. It's smaller than Apple, So, but by and large, I think that they will come around to it eventually, and they're having the conversation. And that's probably the most important part. Mm-hmm. So if you want to talk about, this administration, how positive it is, it's that we're now having the conversations.
Sure.
Do I think that we're going to have a Bitcoin strategic reserve this year? No, I think it has to run through a gauntlet of legislation and committees, and it's just going to take forever.
Yeah.
So nothing happens quickly in DC, or at least not in Congress. Maybe it does in the executive office now, but not in Congress. So yeah, I think that it's going to take time. I don't think we're just going to rush out there and start buying it. Could we have some sort of NGO that's doing it? Well, we've seen that that's possible. We could.
Yeah.
I just don't think this administration is going to do that, especially after cracking down on all of them. They're not going to go and put a black mark on their record by doing that. That just doesn't make any sense to me. Some investors are concerned about long-term inflation, and just what you said, that they're concerned that they're not going to have a real rate of return. If they buy the 10-year at 3.5%, that's not going to give them a real return over the inflation that's already at 3.5%. That's what's being quoted. And then the other side of it is that they know that with all of the deficits we're running, we're just going to have to keep issuing more and more and more and more and more and more bonds, borrowing more money. And there's going to be a deluge of bonds that come to the market. And another thing is, Bessent said it himself, that we've got to move out on the yield curve. We've got to get away from issuing T-bills and start issuing longer term debt. But how do you do that when
he's not doing it?
Well, the debt's at 4.5% still. So there was a period there where Yellen could have done it before the Fed raised rates so quickly. She was the chair of the Fed before. She must have understood that printing $5 trillion was going to be inflationary. They were going to have to raise rates. I don't understand why she didn't get out ahead of that and issue more longer dated bonds. They didn't, and that is the criticism that Bessent has been making. But now what? You can't get out there and start issuing 10-year 4.5% treasuries. That would only make the deficit worse, because now you've got 4.5% yields that you've locked, or interest rates that you've locked in on this debt that it's going to be for 10 years.
Yep.
And so that only raises your interest cost. So he's kind of in a pickle. And now what we're seeing is the market is trying to decide, are we getting into a period of stagflation, where the economy is stagnating, but you still have inflation because of all the assets and because of the high interest rates? Is that kind of what are we following that perfect graph of inflation from the 1970s into the 80s, where it's got that one hump, comes down, kind of stalls out and goes back up again? We're kind of following it perfectly. Is that where we're at? And so they want to get the 10-year down, but just lowering rates from the Fed is not going to do it. That's not the way.
Lavish concludes by analyzing the broader macroeconomic landscape, particularly the challenges facing the bond market. Investors are increasingly concerned about long-term inflation and the sustainability of government debt levels. With ongoing deficits and rising interest costs, the U.S. government is forced to issue an increasing supply of bonds, which puts downward pressure on bond prices and raises borrowing costs, Lavish argues that this situation resembles the 1970s stagflationary environment, where high inflation persisted alongside economic stagnation. If this pattern repeats, Bitcoin could benefit as investors seek assets that can maintain purchasing power in an inflationary environment. While the Federal Reserve may attempt to lower interest rates to stimulate the economy, this alone will not resolve the underlying debt issues. Please like and subscribe.